Welcome to the Authority Hub podcast. I'm Nolan, joined as always by Claire.
And today we're featuring the expertise of Chris Genova, mortgage broker in Grey Bruce Region, Ontario.
If you're a nurse finishing a 12-hour night shift and you're finally ready to buy a home in Owen Sound or Hanover, what happens when the bank looks at your pay stub and only counts half of what you actually earn?
That's the scenario we're unpacking today, and it's more common than most healthcare workers realize before they're already in the middle of it.
Chris Genova works specifically with healthcare professionals across Grey Bruce, nurses, physicians, allied health workers, and the core of what he does is solve exactly that problem.
And the problem is real, Nolan, because healthcare income is layered in a way that a standard mortgage application just isn't built to handle.
Let's start with a client scenario, because this is where it gets concrete.
Go ahead.
A registered nurse comes to Chris Genova. She's been working full-time at a Grey Bruce Health Services site for about 18 months. She's got a solid income, she's ready to buy, and she gets a number from her bank that doesn't make sense.
And the number is low because the bank is only counting her base hourly rate.
Exactly. Her total compensation includes shift premiums, overnight differentials, and overtime, and none of that is showing up in the qualifying calculation.
Because most lenders want a 2-year average before they'll count variable income like shift differentials or overtime.
She's been in her current role for 18 months, so she doesn't have that 2-year history yet, even though she's been in nursing for years.
That's the trap. The 2-year clock resets when you change roles, move to a higher paying position, or shift from part-time to full-time status.
And for healthcare workers in Grey Bruce, that kind of transition is normal. It's not a red flag, it's just how careers in that sector develop.
But the standard application process doesn't know that. It sees irregular numbers and it discounts them.
So let's talk about what the system actually gets wrong here, because this isn't about one lender making a bad call.
Right, it's structural. The mortgage qualification framework was built around salaried income, letter of employment, 2 pay stubs, a T4, done.
And healthcare pay doesn't look like that.
A nurse might have a base rate, shift premiums, overtime, and occasional agency shifts on top of all of that. Each one is real income, but each one gets treated differently depending on the lender.
And if you're a locum physician doing coverage across multiple sites, or a physiotherapist working on a per diem basis, the income can be strong and consistent and still look irregular on paper.
That irregularity is where applications run into trouble, not because the borrower can't afford the home, but because the file isn't built to reflect what they actually earn.
And the stress test compounds this. If variable income is being discounted or excluded, the qualifying income going into the stress test calculation is already lower than actual earnings.
So the stress test is being applied to a number that undersells the borrower from the start.
Which is why Chris Genova's approach to healthcare mortgages in Grey Bruce starts before the application. It starts with how the file is built.
And that's the distinction that matters. A well-structured file has the right lender, the right income calculation, and the right documentation in place before anything is submitted.
Not after the first decline. Before.
The preparation phase is where most of the work happens, and it's the part the borrower never sees, but it's what determines the outcome.
So walk me through what that actually looks like for a healthcare worker in Grey Bruce.
Income documentation for a healthcare worker typically includes a current letter of employment confirming position and base compensation, the 2 most recent pay stubs, T4 slips for the past 2 years, and for variable income, a written confirmation from the employer that those earnings are expected to continue.
That last piece, the employer confirmation, is the one that removes an underwriting question before it gets asked.
Exactly. And for self-employed healthcare workers, incorporated physicians, independent physiotherapists, some allied health practitioners, the documentation set is completely different.
2 years of T1 general returns, 2 years of notice of assessment, corporate financials if the income flows through a professional corporation.
And the qualifying income is typically the net figure after business expenses, which is often lower than what the physician is actually drawing, and that gap matters.
This is where the locum question gets complicated. A locum physician paid through a professional corporation is treated as self-employed, which means they typically need 2 full years of tax returns before that income qualifies at full value.
So a healthcare worker who incorporates and then tries to buy 12 months later may find their qualifying income is significantly lower than their actual earnings. Not because they earn less, but because the documentation framework hasn't caught up yet.
Chris Genova flags this kind of scenario before it becomes a problem. That's the conversation he's having with healthcare clients in Grey Bruce before they make any major employment or financial changes.
And that timing point is important. A 20-minute conversation before a decision is made is worth considerably more than a restructuring conversation after the fact.
Let's talk about lender selection, because this is where Chris Genova's 26 years in the mortgage business actually shows up.
Lender selection in a healthcare mortgage file isn't about finding the lowest posted rate. It's about finding the lender whose underwriting guidelines are the best fit for the specific income structure in front of you.
And the difference between a lender that counts shift differentials at full value versus one that averages them over 2 years can be a substantial difference in qualifying income.
Mortgage brokers have access to major banks, credit unions, monoline lenders, and alternative lenders, each with different guidelines and different risk tolerances.
A monoline lender may have more flexible income documentation policies for healthcare workers than a major bank, even if the major bank's posted rate looks competitive on the surface.
And for physicians and dentists specifically, some lenders offer professional mortgage programs with extended amortization options and higher debt service thresholds, because lenders recognize that healthcare professionals carry student debt that's structurally different from other borrowers.
High in absolute terms, but offset by strong earning trajectories.
So the student debt doesn't automatically disqualify a physician. It's a calculation, not a verdict, and there are often multiple ways to structure the file.
Chris Genova applies this lender matching approach specifically for healthcare workers across Grey Bruce, Owen Sound, Hanover, Walkerton, Meaford, the surrounding communities.
And the Grey Bruce market has its own variables that matter here. Rural properties may require well and septic inspections as a condition of approval. Waterfront on Georgian Bay or Lake Huron can involve additional appraisal considerations.
Healthcare workers relocating from urban centers sometimes underestimate those variables when they're comparing purchase prices to what they left behind.
And relocation itself creates a timing challenge. A conditional offer on a property in Grey Bruce while still employed in another city means income documentation from the current employer alongside a confirmation of the new position.
And the new position may not start until after the closing date.
Knowing which lenders are comfortable with pre-start employment letters is part of the file construction process, and Chris Genova has worked through that specific scenario with healthcare workers coming into the region.
There's one more piece I want to make sure we cover, and it's the availability question, because this is something that sounds like a small detail but it's actually fundamental to how Chris Genova works with healthcare clients.
A nurse finishing a 12-hour night shift is not going to call a broker at 9 a.m. on a Tuesday.
Right. The people who need help are available in the evenings, early mornings, on days off, not during standard business hours.
Chris Genova keeps his cell on from 7 a.m. until 9 or 10 p.m. for exactly this reason. It's not a convenience feature, it's a basic requirement for working in this niche.
And beyond availability, there's the burnout factor. A healthcare worker who is exhausted and overwhelmed may not think to mention a secondary income source, may not have organized their documentation, may not realize a recent employment change has mortgage implications.
Taking the time to actually sit with someone and work through what they have versus what they think they have, that's how errors get caught before they become problems.
And the Grey Bruce healthcare community is close-knit. Referrals within that community carry weight, and the expectation is that a broker working with healthcare workers understands their world well enough to not need everything explained from scratch.
Chris Genova has built that understanding specifically in this region, and it shows up in how the files are structured and how the conversations go.
So let's bring this back to that nurse from the beginning, the one whose bank gave her a number that didn't make sense.
When her file is built correctly, with the right income documentation, the right employer confirmation, matched to the lender whose guidelines treat her shift differentials most favorably, the qualifying income reflects what she actually earns.
The purchase price she qualifies for changes. The home she's been looking at in Hanover or Owen Sound is back on the table.
And she closes. That's the outcome. Not a workaround, not a compromise. A mortgage that accurately reflects her financial reality.
The lesson that generalizes here is straightforward. Healthcare income is not the problem. Documentation and lender selection are the variables, and those variables are manageable when the file is built by someone who knows this niche.
If you're a healthcare worker in Grey Bruce thinking about buying, or if you're about to make an employment change that might have mortgage implications, the time to talk to Chris Genova is before you make the move, not after.
Chris Genova is a mortgage broker in Grey Bruce region, Ontario, specializing in mortgage for healthcare professionals.